I'm Matt Bishar with NAREIT's REIT.com here in Phoenix, Arizona for REITWise 2015. I'm joined by Joe Downey, Executive Vice President and Global Client Advocate with Willis. Joe, thanks so much for joining us.
Thanks for having me, Matt.
Now, how would you describe the overall insurance market climate right now for REITs?
Well, it's two main components for REITs. You have property insurance and you have casualty insurance. Things like directors and officers and things like that falls in a different category than what REITs spend most of their money on. Most money, probably 70 to 90 cents in the dollar, depending on the company, is spent on property insurance, and that's an extremely soft, meaning low-priced environment right now. There's one of our executives used the term over-capacitized, meaning there's just too much capacity. You've heard of that in lending markets, when lending markets get overheated. Well, with returns down so much for so many different classes of investments, people have sought higher returns in the insurance market. Because when times are good and buildings don't burn or earthquakes don't happen and hurricanes don't occur, you make a lot of money. And right now there's tremendous amount of capital chasing return in the insurance industry.
So with that being said, what should REITs do to take advantage of the market?
Well, there's a couple things. First of all, they need to be smart about how they make a presentation of themselves to the insurance marketplace. Because as these greater pools of high-end capital come into the market, they're seeking a pretty sophisticated set of data points from the REITs to be able to estimate what their costs should be and what their range can be, how much credit they can give them for how well they've managed their assets. So that's one aspect. The other aspect is to really interview, meet the different companies, and expand your horizon for where you look. So don't just look in the States, you gotta look in the UK, you gotta look in Bermuda, Japan, global markets. I tend to avoid the Chinese insurance companies from a reinsurance standpoint, but most of the other markets we would seek.
And are there any potential changes or issues in the insurance market coming down the road of which REITs should be aware?
Probably the one thing they should be aware of is at some point this capital will exit the insurance marketplace. It's just natural. They're going to find other places to get a higher return. And when that happens, or after the next major disaster, or Hurricane Katrina of sorts, you'll find that companies will run away, new ones may come, but there's usually a down period where there's a tightening of the market. You just have to anticipate that. You can't expect that it's going to be as good as it is right now. But you can exploit it to a certain degree, but depending on your lease arrangements, it's probably better to be holding back some funds and doing other things from a risk management standpoint with the dollars you'd otherwise be spending on insurance.
And lastly, cybersecurity is a big issue in many different industries and of course in the REIT industry as well. From a cyber liability standpoint, what should REITs be aware of?
Well, the main thing they have to be aware of, I think, today is that it's not just credit card data that can be exploited on a cyber basis. You can exploit the business secrets of your company. Look at what happened with the recent movie explosions and the hacking of Sony and whatnot. You're talking about business data, important information, could be emails about deals going on. That's far more likely a risk to a REIT than being worried about personal credit card data. Your REITs that have personal credit card data would be very limited, mostly the residential sector, the multifamily sector. The others wouldn't be having that kind of information anyway. But they'd all have information about acquisitions, considered divestitures, things like that, things they wouldn't want their competitors to know.
Joe, thank you so much for your insights.
Thanks so much for your time, Matt.
For more on this and other REIT news and analysis, be sure to visit REIT.com.